Hello and welcome, everybody. All right, my name is Robert Lyon, your host, your favorite stock market trading coach. Actually, we're going to be talking about trading futures today. So I've been trading futures for a couple years now. I feel like I've truly hit a new stride with it. It did not come easy. It did not come cheap. It was a lot of work. And now I want to teach people what I've learned so that you can actually make money trading futures as well. So prop firms, if you guys haven't heard of what a prop firm is, a prop firm is essentially a company it's not a loan, but they give you an account that you can trade with their money, right? So you pay $50, you get $50,000 of their money to trade. But in order to get approved for a funded account, you have to basically beat the challenge to get approved for the $50,000 actual account so you can actually make real money. And the way that these prop firms are designed is for you to lose. It's like a casino, essentially, right? You put your money in, they don't think you're going to win. You lose the challenge. You put more money in. You keep losing the challenge. But what I'm going to teach you guys today is how to beat the prop firms and how to actually make a lot of money using these funded accounts and using these methods. Okay. So here's the truth about trading, though. Anybody who says that their trading strategy always works, they are lying. Okay. Here's why. Even in these algorithms, even everything else, right? The truth about trading is that every day and every moment that the market is made up of thousands of individuals, all deciding to buy or sell at the same time. Meaning, any time that you are looking at the markets and the markets are open, there is a collective group of people who think things are going to go up, who think things are going to go down, which means that in order for someone to say that they know what the market is going to do, that would mean they know exactly what thousands of other people are going to decide, are going to decide at the exact same time. Okay, so there's literally thousands, hundreds of thousands of people buying and selling at any moment. So in order for you to predict what is going to happen next in the marketplace, you would have to be able to predict what thousands of conscious human beings are thinking at the exact same time. Okay, so this is why anybody who tells you, oh, my strategy works all the time or this works all the time, they are lying because it's not probable, it's not practical, and it's not possible. Okay. But what are the things that we can control? Right? If we can't control the way that the markets are always going to move, or if we can't predict how the markets are always going to move, what are the things that we can control? All right, we can control what we trade, the cost of what we're trading, and the volume that the tracker. We can control how many contracts we trade, right? The size. The size is a big player in how much money we make, or how much money we lose, or how much money we are working with, as well as your risk tolerance. We can control when we enter the trade. Okay, timing. Not enough, trading gurus talk about timing when timing is really the key thing with everything. And when we exit the trade, probability. So we can only control which ones we're looking at, which tickers we think have the most volume and what cost they are. We can only control the size of how much we enter into the trade, when we enter into the trade, and when we get out of the trade. Smart traders think in probabilities. All right, so you have to have the best chance, right? So this is the best chance for you to beat the market. You have to be trading the right ticker, right, with the right amount of contracts at the correct time and exiting at the best possible time to make sure that you make the most amount of profit. The only way you are truly going to master this is with real experience and lots of time actually doing trades. Okay. Even paper trading has its limit of illusion compared to actual trading, which is why we need to use prop firms, which is why we need to learn this thing. But let me save you, thousands of hours. Let me save you hundreds of thousands of dollars and teach you what I have learned and what I am doing to beat the market. So these are the tools you're going to need. NinjaTrader, Top Step, Trading View. Okay, so NinjaTrader is where I actually enter the trades. Top Step is the prop firm that I'm recommending, and I do have an affiliate link. And if you buy through my affiliate link and you send me a message, I'll give you some free training and some other goodies. And then Trading View is basically where I execute and view the trades and draw and track my trades. Another way that you can do this that I'm probably going to be switching up. The other prop firm I like is Apex. Apex allows you to have multiple accounts all connected, so you can actually be trading up to 20 funded accounts at the same time, and which means you're like leveraging up to like $3 million So once you get really good at trading, you can start doing that. The other thing that I like, Trade-of-8. So Trade-of-8 is another one where you can actually just trade straight on to TradingView. So then you can not have to use NinjaTrader. But right now, these are the tools I use. And as I grow and I change things up, I'll keep you guys updated. But this works just fine. Okay, so no one enters the market to lose any money, right? This is the thing that everybody needs to understand. The markets are not your friends. Nobody goes to the stock market, puts their money into it and says, "Okay, I just want to lose money today," right? And the thing is with the stock with the markets, it's not your friend. Everyone is trading to make money. It does not want you to win, right? Nobody else is going to the market saying, "Hey, I want to give Joe my money today." Right? And you're not putting your money into the market saying, "I want to give Robert my money today." You're putting your money in the markets because you want to win. But every time you are winning, somebody else is losing. So to win at trading, you have to have discipline and you have to have a winner's mindset. If you come into the markets without having a winner's mindset, without being committed to taking money out of the markets will win. It goes back and forth. It's like, yes, a lot of the stock traders are some of the brightest and most talented people around. But also that barrier to entry is pretty low, right? I wouldn't say your competition is that crazy, but there are, whales, there are market movers, and they are also here to win. They are here to take your money. So every time you step into the markets, you have to take it seriously and you have to be focused and you have to have a winner's mindset. Otherwise, you will lose. So here are the 5 rules, though, to basically beat the markets and to be successful. Okay, rule number 1, get in, get green, get out. All right. And this we'll talk about more about this later. Always have a stop loss. Okay. There's going to be days where there's going to be news that comes out. There's going to be whales that literally shift the whole market. There's going to be times where things aren't going to go according to plan. So always have a stop loss. I do trade with a stop loss, but I trade with a wide stop loss, especially because I trade NQ and it moves very sporadically. And I'd rather have a wider stop loss. That's just how I trade, and that's what I'm going to tell you guys today. Always have a profit goal. Okay, so for Top Step to get approved for your funded accounts, the profit goal is $1,500 a day per account. Okay, so that's typically what I've kind of been programmed in my brain to get to. Is on each account, my profit goal is 1,500. As soon as I hit 1,500, I'm good for the day. I'll move on. If you do $1,500 every single day in each account or in one account, that's $30,000 a month or more. I don't know. I'm not going to do the math right now, but that's pretty much what it is. Okay, if you lose 3 trades or more, you shut down for the day. And you never want to turn a winning day into a loser. Okay, so you want to be able to scale in and scale out. This has been a new breakthrough. Every time you see a good opportunity, you need to scale into the winners, and then you need to scale out of it, but you want your winners to ride. The reason we scale out of it is because at some point you're going to be up, 4 points, 10 points. You want to take profits because the best trades that you can be in are ones where you're already profitable. And then you basically want to cut your losses fast and double down on your winners and let your winners ride. That's the biggest thing. Okay, so here is how you consistently beat the prop firms. Take it or leave it. This is what I figured out. You're going to buy 10 accounts basically. Okay, you're going to risk a total amount of $50. Again, you're going to be trading with other people's money. So your total risk is only $500. Okay. With $500, you're going to buy 10 of these accounts. What I do is I trade NQ. I trade it from 7 a.m. To 9 a.m. PST. And I actually trade earlier in the morning as well, but this is just to keep it simple. But only trade A+ setups and channel breaks. We'll go over that. Use the get in, get green, get out plan. Okay. Out of your 10 accounts, you're going to probably get anywhere from 2 to 5 of these accounts funded. Once you basically get an account funded, you're going to focus on the funding accounts. You're going to stick with the get in, get green, get out plan. You're going to be able to make anywhere from $500 to $3,500 a day, 3 to 5 days a week. So this is a lot of money for people. If you've never, been trading, once you master trading, you can literally reach into the markets and pull money out at will practically. Okay. But you have to go through the training. You have to have the strategy and you have to be able to have self-discipline and you have to have a plan and you have to work the plan. Okay. So why buy multiple accounts? Okay. So the reason that you're going to buy multiple accounts is sometimes you miss the move, right? If you look over here on the right, this is an actual account. The first move, I bought in right here. I don't know if you can see my mouse, but I bought in basically at the top of the green because I thought we had a breakout to the upside, and then it reversed, right? So if I would have only had one account, I'd have been done for the day, right? I wouldn't have been able to keep trading. But then I saw the opportunity because it reversed. I got in on the short. I got out right here, right? Then we went back up, and then I got back in, and I made $10,000, right? So if I only had one account, I would have been stopped out right here, and I never would have gotten the $10,000. This is why we need to have multiple accounts because sometimes you're going to miss the move. Okay, it just is what it is. You never want to turn a green account into a red. Okay, so whenever I'm up $1,500, right, I wanted to stop trading this account because why risk it, right? Why continue to risk the profits for that account when I could basically move on to another account and start over, right? So this is why you need multiple accounts when you're starting out because the Top Step and these other Propfirms they have specific criteria, right? If you buy a $50,000 account, in order for you to get approved, you have to make $3,000 in the combine. But if you make $3,000 in one day, they won't count it. So you have to basically make it in 2 days or more than 2 days. They don't want the profits to be done in basically what's the word I'm looking for? They don't want it to be all done in one day. They want it to be multiple days. And this just teaches you how to be consistent, okay? And you never want to turn a green account red, right? The biggest issue that I have, personally is over trading. Okay, so I had to come up with a system that combats over trading. And what I mean by over trading is it's like that gambler's high, right? You'll start winning and then you'll say, okay, I'm going to keep winning forever now. When in reality, I say hunches eat lunches, right? So if you're up, you need to stop trading, right? And you need to either stop trading or you need to go on to the next account and you want to lock in those profits for the day. If you don't lock in the profits, you're going to just start trading and trading and trading. And then eventually you're going to lose all the money that you made and it just ends badly. The combines are hard, guys. You're basically going against the machine that makes money when you lose. It's not designed for you to win. Okay, so in order for you to win, you have to basically, whenever you're up, you have to stop trading and you have to just move on to the next account. And this is going to give you the highest probability to pass and get a funded account. So why trade between 7 a.m. and 9 p.m.? Okay, so typically the open is too volatile. All right, I used to always trade the open. I have this strategy where the first 5 minutes it tends to form a consistent pattern where you'll have the opening 5 minute bars, but what happens is it's just too sporadic, and there's no point in risking your whole account when the market is just trying to figure out what's happening, right? So typically, you want to basically only trade when the market has middle amounts of volume, right? If there's no volume, like in the evenings, there's no action and you'll just get chopped to bits. If there's too much volume, it's just too erratic and you'll just get wiped out. So you want to have that sweet spot. And I find that the best spot is between 7 a.m. and 9 a.m. Okay, after 7 a.m., the markets tend to pick a clear direction. Okay, so at the open is at 6:30 a.m. PST. A lot of money flows into the markets because it can. And then usually it's either between like 6:45 and 7:15. There seems to be a algorithm shift where all the algorithms decide the probability of which way the market is going for the day, and it starts to take a really good trend. And a lot of the times, guys, in the open, it'll go one direction, and then according to the data, 70% of the time it will flip directions after it has a large move at the open. Okay, so these are just some things that you can put in your pocket, whatever it is. But 7 to 9 seems to be the sweet spot. And then for myself as well, I usually wake up around 5. I check the markets at 5:30. I go to the gym. I come back and I try and just sit on my hands for the open, unless the open is a very aggressive move, then I can get a jump on the day. But for the most part, I'm waiting for a clear picture of what the market is doing. And that's why the timing is everything. Typically, you want to trade when the volume is not too high, not too low. We talked about that. Never trade on news days. Okay, you can trade on news days. It just goes back to the fundamentals. The way that I trade, I don't give a shit about what the news is doing. I would rather just not trade on a news day. Okay, I'm not going to sit here and analyze every single stock and every single ticker and every single thing that the Fed is doing, right? That's not my method of trading. I don't have the brain bandwidth to worry about those things. But if I see that there's news coming out that day, I'm just not going to trade that day. Or I'm going to find out what time the news is coming out, and I'm not going to trade during that time. And it's just what I've learned because you'll just get smoked, right? The market will move 20 plus points at the drop of a dime and just wipe you out. Even if you have a stop loss, you'll still it'll hit your stop loss and screw you over. You have to be patient. This is the hardest part. Is you have to be patient and wait for the market to give you opportunities. So you do not want to FOMO into trades. You want to become an observer and a planner and wait for the market to present you the next opportunity. Okay. Only trade high probability setups. And we're going to jump into trading view and I'm going to go over this stuff. Okay. But a high probability setup, um, you cannot be in every trade. Okay. You need to learn to be an observer until an opportunity appears. You are looking for channel breaks with volume. The hardest part is timing. And I'll say that again. The hardest part is timing. Entering in at the right time. This is the hardest thing you need to learn how to do to be a day trader. But if you can master seeing the highest probability zones and then learn to scale in and double down on winners and cut your losers, money consistently happens. Okay, so this is going to be your edge. You're going to be able to draw or predetermine the high probability zones, always have a stop loss, scale into the trades, cut the losers, double down on the winners, take profits, scale out, let the winners ride. If you lose more than 3 trades in a row, you're done for the day. Okay, so let's go over how to predict and how to see high probability trades, right? So every day that whenever I step into the market, again, I trade NQ. When I first started trading futures, I traded the Dow Jones, gold, and oil, and I was very successful. But I choose to trade NQ because I actually like the volatility and I don't know. I choose the violence of the NQ because it can make a lot of money. Okay, so the way that we can check the levels and things like that, whenever I say a level, we're looking for high probability zones. Okay, so you can tell right here that every time that we hit this mark right here, right around 17,933, it's a range though. Okay, don't forget, these are always going to be ranges. Just because I have a straight line does not mean the line is going to be respected, but this range will typically be respected. So this was from a long time ago, right? And then what happens is we can keep going and we can tell that it's going to respect this line again right here. Right. So this is a big overview. This is on the 5-minute chart. We went to usually what I do is I'll start looking at the 4-hour chart to get the general trend. The general trend has been very up. And then recently we've taken a downswing. And we basically ever since March 30th, we've kind of been into a bearish pullback, right? But for the most part, we've been very up. We're in a bearish pullback. And then now we basically hit these levels down here and we're popping back up. But again, the main thing that I'm looking for are these hard zones, right? Because look, if every time we hit the zone here, we got stopped out, the probability of when we hit this zone again here is very high. And what happens, guys, is whenever we break through one of these zones, all of the orders that have been placed above this zone get filled, and we tend to have a large push. This is how you can really determine whether or not something is going to be a good move, right? So whenever we hit the line, the probability that we're gonna reverse is very high. But if we do see that it breaks through and it stops, the candle actually stops through the line, the probability of us going way high is basically going to be the next move. It's hard to explain, but the more that you do trading, the more you start to see these supply and demand zones, and you start to see these high probability zones. Those are the ones you want to wait for. Okay, again, we're looking at the 4-minute. If I had to, do one more, that seems fairly fair to say. I see this right here. This is another channel, right? Basically, everything that we're doing here, it looks like we're on the up and up now, right? So we had this large move down. We moving up. We broke through here, and we will either continue up, or if we break through this bar, we're gonna go back down. But this is the 4-hour. Now we're going to break it down. We're going to look at the 1-hour, and we're looking for these levels of high probability, and we're looking for channels as well. And what I mean by a channel is like this is an example of a channel. And on the hour long, it's hard for you to see these channels. But you see every time that the ticker basically hits this line, we bounce, right? And it's a very clear definition. And when you're watching these moves, and when you're doing this during the day, you're going to be able to say, okay, here it looks like we have a pretty solid channel forming. So then you look at the hour, you look at the 5 minute, and you can either decide, okay, am I going to, this looks like a channel right here because we tend to consistently, we were going down, the channel broke right about here. You guys will see it. So we had this down channel, down. Every time we would hit this line, we would basically go below it. And then right here, we broke above, we came back down, but we verified that we've broken this channel, and now we're going to the upside, right? So the market goes down, it goes up, and you can clearly see every time that we hit this line right here, we bounced, right? Same thing here. Every time we hit this line, so we're going up, we hit the line, bounce. We hit the line, bounce. We hit the line, bounce. Okay, so now we're in an upward channel. And you can actually start to predict, okay, every time that we hit this, we're probably going to have an upswing. Boom. We hit it there again. We hit it here, we hit it there again. We hit it here, we're up, we're up, we're up. And then now we can take profits. Okay. And now you might be asking, okay, well, we're hitting that line, but when should I enter? Well, this is where the strategy comes in, that you have to look at the volume of what's going on. So first you have to identify these A plus setups, right? We had this major breakdown down here, right? We had these levels where we basically broke through, and it looks like, this is definitely a probability zone. So if we're going to go back down here, we're going to bounce, right? So here's another time we bounced, and you can tell that it's kind of just a larger move that we have going on here. Whenever we hit this zone, we're probably going to bounce. Whenever we hit this zone, we bounced again. And then now we're on the up and up from there. But we're able to tell that whenever we hit these large turnaround points, right? These zones where the market hit a specific position and everybody decided, okay, that's cheap enough. This is the deal. Everybody bought in. Boom, boom, boom. Now we're up. The probability of us returning to that zone and people buying in is very high. Okay, that's what I'm trying to get at here. And you can basically start to predict, okay, so if we come back into these probability zones, these high probability zones, the market is going to explode and change direction. Okay. But there's basically how you have to basically look at the market is you have to see the probability of whether or not this is going to be a zone where we're going to change directions. Okay. And then you want to mark these and you want to have the best chance of getting in at these big moves. And what you're looking for is a chance for us to hit the zone, right? The first tick that we did is we hit the zone. The volume was there. But we were in the green, right? So this green, look at how low the volume is. No volume, no volume, no volume. And then boom, this guy hits, and we literally are on this upward channel. It hits, we go up, and we basically go straight to this probability zone. We get rejected, but we keep the volume high, we push through, and then now we're on the up and up, right? And this is kind of right now. So Sunday, I'm expecting it to keep going up, but who knows what's going to happen. But the main thing is you're looking for these channels, right? You're looking for these high probability zones, and then you're waiting for the markets to hit. And you can literally set alerts, and whenever the market is going to hit those times, you get in at those moments, and you start to look for when you're going to enter into a trade. But I'm just showing you what is working so that you can, if this is something you want to do, you can commit to this and you can actually learn how to make serious money making these trades. Okay. But the biggest breakthrough is these channels, right? So, I mean, typically I'm looking at the 4 hour, then the 1 hour, then the 5 minute, and then I'm making all my actual trades based on the 1 minute. It's when I'm getting in. So as you can see, I wake up typically at 5, nothing's happening. And then right at 5:30 is when the pre-market opens. And you can see at the pre-market, we just basically shot up, shot down, and then had this huge green candlestick pump to the top, right? And that's an easy couple $1,000s that you could have made. And then we basically have an idea that the market's probably going to continue going up from there, right? But at the tip where it turned around, this is where we had this line that we could have seen from earlier, that we could have said this is a high probability zone that the markets are going to turn around here. And we could have started looking for a different move. You're looking for these trending lines that are basically clear levels that have high volume and high potential to build up momentum, and then you're looking for the volume candles down here for when you want to get in. And you'll start to see that these will start to create these patterns, right? And I call them channels. So you're looking for high probability zones plus a channel breakout. So this is one we basically went up, we came down, we keep hitting this line and bouncing back up, bouncing back up, bouncing back up. And then you can see the volume picks up right here. Boom, we break through. We hit up here, which must be another line of a high probability turnaround, right? Because we haven't been able to break through this line. You can tell right here that this is the top. So if we can't break through this, we're going to continue going down. But then we have this large momentum to the upside. So we're probably going to bounce off here, hit this line one more time, and then skyrocket upwards. So anyways, you're looking for these high probability zones, and then that's when you're going to want to get into a trade. And this is your edge, though. You wake up before the markets, you look at where are these zones? Predetermine where the high probability zones are, where the market is going to change. You're going to have a stop loss. You're going to scale into the trades, right? So you at the zone, you're going to say, okay, we have we have some momentum going. We hit this line. The volume just came in. Okay, I'm going to scale in here. Oh, it's going in my direction. Scale in, scale in, scale in. Let it ride. And then you're going to be moving your stop loss the whole time. And then you can start to scale out once you're at your profit target. And you want to let your winners ride, though, for as long as you possibly can. So pre-draw your zones. Look at the zones. You look at it like a scientist, determine where the likelihood of the markets are going to hit and turn around. Scale into the trades, cut the losers, double down on your winners, take profits, scale out, let the winners ride. If you lose more than 3 trades, you want to stop. So these are the skills that you have to work on to really become a good day trader and really actually master this thing, right? You want to understand yourself and what state of mind you're in, and basically where you are at to get ready to trade into the markets, right? Because if you have to have a winning mindset. You have to be awake at freaking 5:30 in the morning. If you're on the Pacific time, if you're on East Coast, it's a little bit later. And you have to know, like, when do you trade the best? What state of mind are you in? What habits do you do to trade the best? Okay. You have to understand how the market moves, right? The market tends to give you similar setups, and then you basically need to identify these high probability zones, and you need to get better at identifying them. And then you need to get better at entering into the trades at the correct time. Again, timing is everything. So you're gonna see these high probability zones. You're gonna mark them out on your trading platform, and then you're gonna figure out what is the best time to enter these trades. Typically, what I'm looking for is I'm looking for a candlestick to close above or below one of those probability zones, and then I'm looking for the volume, and I'm looking for the volume to be in my favor. And again, I'm going to enter into these trades with a small contract. And if it continues to go in my direction, I'm going to aggressively scale in. And then once it continues, I will slightly scale out while moving my stop loss. So I'm in the money and I'm scaling out. And then I get to the point where I'm already profitable. And I'm going to continue to do these trades. But you want to identify when the volume is in your favor. And the biggest thing else you want to work on is not over trading. Again, this is the hardest part, is to say, okay, I'm winning, I'm up, I'm going to stop trading. It's like whenever you go to a casino or you go out with your friends, oh, I'm just going to have one drink, right? And then it turns into a whole bunch of drinks. You need to have that level of discipline that's going to say, okay, I'm up, I'm making money, I'm going to stop. Right. And this is a good day. I want to end the day as a winner. You also don't want to FOMO into trades, right? There's going to be times where you come into the trade. It's going to be right at your high probability zone. You're not going to have had all of the time to watch the markets, and you're just going to want to jump in and not miss that opportunity. And then you're going to burn that account, and it would have been better off if you would have just took a breath, took a beat, waited for the next setup, got into the next setup, and made some money. Okay, you want to let your winners ride. The biggest thing is if you keep just losing trades, but then you have one good trade and you let it ride, it'll cancel out all of your losers, right? So you need to basically, when you have the winners, you need to aggressively scale into them, get profitable, and then just let it ride for as long as you can take it without it reversing on you, right? So it's a balance, it's a dance that you do with the markets, but doing these things is going to make you successful, and then not losing money, right? And I say that because you are going to lose some trades, But at the end of the day, your system needs to be profitable, and what you're doing needs to be profitable. Otherwise, it just doesn't make any sense, right? So you don't want to lose any money. Okay, so this is the strategy that's going to allow you to beat the prop firms, and it's get in, get green, get out. And I showed you before why this matters. It's because basically you want to have a profit limit, but you also just want to win the day, right? This basically just goes back to if you have an account that is positive, do not get greedy and keep trading, right? The hunches eat lunches, right? So if you're winning and you think that the next trade you're going to do is going to win, the likelihood is against you. Again, the market is not your friend. The market wants to take your money. So if you are already positive, you need to have that conversation with yourself and say, okay, I'm in, I got green, I'm going to get out now. I'm going to move on to my next account and I'm going to trade that account, or I'm just going to shut down the computer today and I'm going to call it a win, because a win always feels better than a loss, right? Losing $1,000 is always going to piss you off 10 times more than winning $1,000, right? So you want to make sure that even if you're up $500, that's good for you. You can stay that and you're going to win $500 as opposed to being up $500, trying another trade, up now you're down 200, or now you're only up 200, up I have to get back now to that 500, up now I'm negative 500, and now I've lost all my profits for the day. It's better to stay consistent, right? Look for the A+ setups, work on the timing. Once you win that trade, just keep it a winner. Lock that in, move on. Okay, before you enter a trade, you have to have this plan in place, because again, once you start trading, your brain is going to get revved up. Okay, the whole purpose of the stock market is to take your money, right? So you have to control yourself, and when you start to enter into trades, right, and you get really revved up because it's exciting, it's like a kid, right? There's green, there's red, there's lights, you're making money, there's stakes. You need to be able to have this plan that tells yourself, okay, before I start trading today, my plan is to get into the markets, get my money, and get out of the markets, and not continue to trade and not continue to overtrade and not continue to get so revved up that you just keep trading, because it's like the poker table. If you keep playing games, eventually the house is going to win, right? So the only way that you can win is once you are up, you lock in those profits and you take a step back. So you want to get in, you want to get out, and you want to basically move on. Or get in, get green, get out. And this is really going to help you become consistent. Okay. The other thing that new traders do is they just sit at the computer all day and they trade too much, right? And then they lose every day, and that really beats up their mental state because they're over trading. So this, though, get in, get green, get out, is going to allow you to win, right? And to become a consistent winning trader. Okay. It's also going to stop you from over trading. It's going to build momentum, and it's going to help you not turn green days into losers. It's going to teach you self-control. So I cannot express how important this is if you're going to do this, to stick with this plan. And this plan has worked for me. Maybe other people have other plans, but this is what's worked for me. Okay. Bulls will make money, bears will make money, but pigs will get slaughtered. Okay. So you want to get in, you want to get out, and you want to get green. Okay, so this is how you can basically beat the prop firms and start making real money trading. You buy 10 of these accounts, $50 each. You risk $500, guys. Again, you're risking $500 and you're getting access to $500,000 that you can be trading. Okay, but all you're going to be able to lose is $500. And the reason you have multiple accounts is because you want to basically have the highest probability of not missing the correct setup. The combines are hard; they're designed for you to fail. But if you have 10 accounts and you use the get in, get green, get out plan, that means that you get in with one account, you hit 1,500, you move on to the next one instead of risking continue trading, right? And then you hit them. And then if you lose 3 trades, you're done for the day, right? You trade between 7 and 9 a.m. Really, you're just trading during the hours where you are most likely to not, number one, if there's not enough volume, you're just going to get chopped up. And then number 2, if there's too much volume, you're going to basically, it's too sporadic and the moves are going to be too big that you're just going to get swallowed up. Okay. So between the hours of 7 a.m. and 9 a.m., I find are the best times to basically look for these setups. You're only going to trade A+ setups and these channel breaks. You're going to use the get in, get green, get out plan. You're going to follow the 5 rules, and then you're not going to give up. right? You're only going to lose if you give up. Unless you really suck at this and you just keep losing all your money, then you should probably give up. But if you're serious about being a successful trader, this is what you have to do, and this is how you can beat the prop firms. And again, we're talking about real money here. Once you get a couple of these accounts funded, and you keep with the strategy of get in, get green, get out, you're actually going to be making that $500 to $1,500 a day, which can be up to $30,000 a month, which is a solid living only working 2 hours a day, right? Which is very cool. And again, trading futures goes against my wealth principles because you don't own anything, but it does go with being able to leverage yourself, right? Because this is a skill you can learn where you can make more money than most people make working an entire day within an hour or two, right? Very, very powerful. And you can do it before the day even starts, right? Okay, so here's just a couple closing tips. Right now, what I do is I wake up, I go to the gym, I make my trading plan for the day, and then I enter the trade, right? Then I get into the markets. I do this because I used to just wake up, like it's super freaking early over here in Arizona. Like I don't care who you are, waking up at 5 o'clock sucks. Like I'm not a morning person. I don't enjoy it. But I used to just wake up and try and like start trading, and my brain would not be where it needs to be. It would not be functioning right. So now what I do is I wake up, I go to the gym, I kind of get myself pumped up, I get my blood flowing. Then I sit down and I make my plans, right? I don't just jump right into the market and start clicking buttons. I make the plans. I look at the opportunity zones that I see that we could potentially hit. Then I start entering for my trades. Once my mind is in the right place, once I have my plan set and I'm ready to start trading, I'm trading and I'm just focused on what I'm doing. When the day of trading is done, I'm going to journal real quick. What trades did I enter? How much money did I make? What was my state of mind before I got in? What can I improve on? Right. Those are the things that I pretty much do. And sometimes I'll record my trading as well, just to figure out where I'm at. I don't do that as much anymore, but when I was starting out, it did help me just like get my shit together, be like, why did you enter that trade? What was it? Oh, okay, that's what happened. Blah, blah, blah. Okay, the best times for me, Sundays at 3 p.m. is when the futures market opens, and there's always a big move basically at that time. So I make money on Sundays. Then I make a lot of money at 5:30, and then I'm typically waiting till after the open. I don't really trade the open anymore just because I just get smoked so many times. You just don't do it anymore. So I'm waiting for 7 o'clock to 9 a.m. Monday through Friday, and that's when I make the most money. I mindfully focus on timing. Okay. Timing is everything. Entering in the trade at the right time is what's going to make you the most amount of money. So you have to mindfully talk to yourself and say, okay, like you want to be so close to the market going the opposite direction that it's scary. But once you get a pulse on when to enter the market at the correct time and you start to get really good and like disciplined at getting in at the right moment, that's when you're going to make the most amount of money. But you also want to scale in. You want to have a strategy, right? You have your stop loss, so you can only lose so much, but you scale in. And once the market verifies that it's going in the correct direction, you double down on your winners or you cut your losers. Really work hard on being self-aware and not trading on tilt. Okay, so trading on tilt is it just happens. It's like we're in a shitty state of mind. We didn't get good sleep. Somebody pissed us off, and then we start trading in the markets, and we're just not really focused, and we're just going to end up losing all of our gains. And it's better to just not even trade unless you are like energized, you feel good, and you're in that winner's mindset. If you're not in a winner's mindset, I don't recommend you trading, or at the very least, don't trade with real money. Just use a sim account, right? If you're not feeling well and you're there though, like just use the sim account. It's better. Or don't trade at all, right? And do something else. Go for a walk, get your head straight, and then come back. Okay, if you really want to do this, you have to commit, right? And you have to commit to being a serious trader. And when it's time to do trading, you put your phone away, you just focus. It's just you and the charts, right? And then basically scaling in and scaling out has been a huge game changer. It's allowed me to make way more money and lose a lot less money. So again, I'll enter these trades with like 1 to 3 contracts. And if it starts going in my way, like it's supposed to, I double down, double down, double down, and then I'll be moving my stop loss. And then once I get I take profits usually at like +4 points and then +10 points. And then I'll still have 2 or 3 contracts in, and I will just let that ride for as long as the momentum continues. Okay. And it's very, very powerful to enter in with one or two or three contracts because first of all, you enter in, you're making a bet at that point, but then as the educated bet, right? As the educated bet goes in your favor, you're doubling down and you're getting in and you're letting that ride and you're going to make a lot more money doing that as opposed to just throwing 5 or 10 contracts at everything, right? Because then if it goes the wrong way, you lose. Whereas if you scale in and it goes the opposite, you only are losing 1 or 2 contracts, right? Which is a lot, which is less. So that's how I make more money. And then if it's going the right way, it tends to really push, right? It tends like when the momentum, when you get in at the right moment and the momentum is going your way, the market will just print you money, right? And those are the opportunities you really want to wait for. If you're stressing out over trading, you need to stop trading, right? Trading is not a game where you should be stressing out over every little dollar. You're gonna really learn a lot about yourself and your relationship to money through trading. And if it's stressing you out, if you're not enjoying it, if you're forcing it, you're just gonna lose money, right? Compared to the person who's loose, who's not stressed, who's just making the best trades that they possibly can. Okay, most of trading is all personal psychology. It is rarely the markets and mostly the trader that will determine whether or not you win or lose. All right, so those are the closing tips. I hope you guys appreciated that. I thought that was cool. I'm going to try and explain these channels and these A plus setups one more time, and then I'll basically answer your guys' questions because I feel like I didn't explain it clearly enough. So again, what we're looking for is we're looking for channel breaks, A plus setups. So we'll start with like an A plus setup whenever the markets are clearly showing you where whenever we hit this level, we basically turn around, right? So right here is a very good example. And this is actually what's called a reverse breakout. So multiple times you can see how every time we hit this line, we basically turned around. Like every time. Like it started here with this little tiny one. It would not break through. And then it basically plummeted and then it did the same thing. But every time we hit here, boom, we hit it, rejected it, we came back down, right? So then we have this channel, right? And this channel is there's a bottom and a top, and we're just stuck in this battle for price at this area. And you can also see how there's no volume for this whole period of time. There's no volume. So that means that we're just stuck in this channel bouncing around. And then finally the volume comes in. We try and push to break through the channel. Everybody decides, no, there's not enough momentum to the upside for it to break through. We break through just a tip and then we reject it and we come back down. This then creates the next channel, right? As you can see, there's this next level. Literally, look, if you look at this, like every single time we hit this level, boom, rejected, and we just start to trail down. Then we have a big drop. We do one more shot to try and break through, boom, down, and then we finally get to this level down here, and that's when we finally break through this channel. Now you see that we broke through. Now we're into a new channel, right? And this is where you would want to enter into a profit, and you would enter in to go long here, right? And then you would basically ride this bad boy up. And you would start to see, okay, like every single time we hit this line, we bounce, right? So now we have a new channel. And we're just going to keep doing this until we hit our profits, right? But we don't want to get in if we don't clearly see the markets using this method, which is kind of a whole nother lesson, but you'll figure that out. So what you want to see though is like we have this channel every single one of these, like it's just perfect. It's just going up in momentum, right? It's like a perfect straight line. So we know that we're building. So first we would want to get in here when we broke the downward channel and we see this little uptick. First we see 1 bar break. Usually what happens when it breaks the channel is it'll pump up, come back down, and then the next bar is going to be the one that determines if we're going to continue in that direction. But yeah, we broke the channel. We got a solid green candlestick here, and then we just basically continued up, boom, 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 easy money, kind of drip down, keep going up, easy money, come back down, and we start to form this new upward momentum channel. So we can all agree, like it's fairly easy to tell this is going up. During the time that you're seeing this, though, it's not. But if you draw these lines, you're going to be good. And then we go all the way up here, and we kind of form this upper channel, boom. And then we start to see red candlesticks, red candlesticks, red candlesticks. and then we form this new one. Again, there's not a lot of volume, or there is volume here, but this is during the day, right? So all the volume is basically from 6:30 till about 12 o'clock. And then afterwards, you just get stuck in these no volume, no momentum channels, and then it picks back up again. What you're looking for these clear indicators, barriers where the market is clearly telling you every time we hit this line, we are turning around. And then you want to mark those on the calendar the day before. And what happens again is if we do break through these lines, we get these huge pumps, right? We just kind of go boom and we rocket off. And it's because all of the market is in these little areas. They have orders placed to be filled, and they've just been piling up, right? So every time that we almost get to fill all those orders, we would bounce back down, and then as soon as we finally do break through, all those orders then get filled, which gives us a huge momentum push to the next level. I mean, and like basically before you start the day, you want to try and identify some of these that are fairly clear. Like you're looking at the bottom here, and then you're looking at the top, and you want to. I mean, we're not going to probably go from. I mean, we might go from 18 all the way up to 18,500 in one day. It's not unheard of. But I mean, that's a clear line right there. But that's also not going to probably happen. But maybe in the future it will, and we want to like keep track of that. Here's another barrier line that we're going to be looking at. And again, we're not going to necessarily enter in at these phases, but we're going to start to look at it as objective, and we're going to be looking at it for an entry point of either it's going to turn around or it's going to push through. And if it pushes through, we want to be on that big push. If it turns around, we want to ride that bad boy all the way back down. And we want to basically time it correctly. And that's how you're going to basically win more, right? So we're literally right at this line right here. And you can see that. So now we're kind of stuck in this little this upward channel. But then we also know like right here, if we hit this again, we're probably going to bounce down at least a little bit. Or we're going to have a complete reversal at this line, or we're going to pop through and we're going to continue to the upside. So anyways, I know it's kind of advanced, but this is what works. And this is how you can, again, start to make anywhere from $500 to $3,000 a day trading futures, leveraging other people's money, only working a couple hours a day. Are all you guys' brains like soup now, or anybody have any questions?